The global defense AI market is accelerating toward $45 billion by 2030. Cybersecurity intelligence alone represents a $28 billion opportunity today. That's projected to exceed $38 billion by 2028. But here's what the mainstream financial press is completely missing. There's a $1.9 billion NYSE-listed company that just secured a $165 million contract with the U.S. Army. This validates decision intelligence technology that could transform how America defends critical infrastructure. They just closed a transformative $250 million cash acquisition of Ask Sage. It's a secure generative AI platform, already serving over 100,000 users across 16,000 government teams and 27 federal agencies. This makes it a triple threat play on military modernization, homeland security infrastructure, and the $180 billion global supply chain revolution. Here's what makes this completely different. This strategic pivot is flying under Wall Street's radar. Financial media obsesses over Palantir's $150 billion valuation and trillion-dollar defense contractors. Meanwhile, this decision intelligence specialist is trading at just $4.07. They're sitting on a record $715 million in cash. They have federal contract backlog of $376 million. And commercial expansion is finally gaining momentum after years of government-only revenue. Does this setup sound familiar? In early 2021, this stock surged past $12 on pure speculation about government adoption. Now the Ask Sage acquisition closed as of December 31st, 2025. There's $25 million in new annual recurring revenue beginning to hit the books, and the One Big Beautiful Bill allocates $170 billion to Homeland Security, plus $150 billion to DoD. We're sitting at another major inflection point. Will you recognize this acquisition catalyst and funding wave while the stock trades at 14 times trailing sales? Or watch from the sidelines when Wall Street discovers the recurring revenue transformation? Full transparency here. We're analyzing BigBear.ai holdings. Ticker, BBAI NYSE listed. Currently trading around $4.07 with roughly 458 million shares outstanding. Market cap hovering near $1.9 billion. This is a decision intelligence play with proven Defense Department deployments. Expanding federal agency footprint, and now commercial-grade recurring revenue from the Ask Sage deal. BigBear.ai's core technology converts massive, unstructured data streams into real-time actionable intelligence, specifically for defense operations, cybersecurity threat detection, supply chain visibility, and border security. Instead of intelligence analysts manually correlating terabytes of satellite imagery and signals data, commanders get predictive threat assessments within operational decision windows. This is mission-critical decision superiority. It can prevent supply chain catastrophes, accelerate cyber threat neutralization, and optimize logistics for billion-dollar military operations. Let's confront the financial reality head-on. BigBear.ai is guiding for approximately $125 million to $140 million in revenue for full year 2025. That's down from initial projections due to Army program timing delays. This translates to roughly 14 times to 15 times trailing revenue. Significantly elevated compared to typical government contractors, but compressed versus high-growth SaaS peers trading at 20 times to 40 times revenue multiples. But here's the critical context. That revenue composition is undergoing fundamental transformation. The Ask Sage acquisition just added $25 million in annual recurring revenue, with 100,000 plus users already deployed. Management revised annual revenue guidance to $125 million to $140 million. This reflects contract timing variability, as certain Army intelligence programs experience temporary funding pauses. That's not business model failure. It's the predictable friction of federal procurement cycles. BigBear.ai reported total contracted backlog of $376 million as of Q3 2025. Combined with the Ask Sage $25 million ARR, that represents nearly 3 years of forward revenue visibility. If Ask Sage integration executes smoothly and federal contracts convert at historical rates, revenue could re-accelerate toward $165 million to $185 million by 2026. Balance sheet strength becomes the game changer. As of Q3 2025, BigBear.ai held $456.6 million in cash. By year-end 2025, following the Ask Sage acquisition close, they reported $715 million in total cash. This creates unprecedented strategic flexibility. They've also aggressively deleveraged, reducing convertible notes from $200 million to approximately $142 million, improving the debt-to-cash ratio from 4.0 times to just 1.2 times since Q4 2024. Valuation mechanics become genuinely interesting here. At projected 2026 revenue of $150 million to $170 million, the stock trades at roughly 11 times to 13 times forward revenue. If Ask Sage recurring revenue scales toward $35 million to $40 million by late 2026, and federal contracts stabilize near $130 million to $140 million, conservative modeling suggests $170 million to $180 million total revenue potential. With improving margin profile, let's benchmark against direct comparables. Palantir trades at roughly 28 times revenue despite similar government concentration. C3.ai commands 12 times to 15 times despite ongoing profitability challenges. BigBear.ai holds a cleared FedRAMP High authorized generative AI platform, serving 27 federal agencies with proven adoption momentum. Analyst coverage remains limited to just 2 active analysts, but institutional research from H.C. Wainwright and Cantor Fitzgerald maintains price targets between $6 and $8. The consensus range centers around $6.50 to $7. That represents approximately 60% to 72% upside from current $4.07 trading levels. Consider these 3 scenarios. Pessimistic, $2.50 to $3.50. Ask Sage integration disappoints. Federal contract renewals stall below 70%. Gross margins remain compressed below 25%. Base case, $6 to $8. Ask Sage contributes $25 million to $30 million ARR by end of 2026. Federal backlog converts at 80% to 85% historical rates. Total revenue reaches $165 million to $180 million. Optimistic, $9 to $12. Accelerated Ask Sage commercial expansion. Additional Defense Department contract wins from the $320 billion supplemental funding. Revenue exceeds $200 million with improving EBITDA trajectory. Now let's address what genuinely threatens this thesis. BigBear.ai reported negative adjusted EBITDA of approximately $9.4 million in Q3 2025. They withdrew full-year EBITDA guidance due to increased investment spending, while they're currently cash-rich. Aggressive M&A or poor integration execution could necessitate future equity raises, potentially diluting ownership significantly. There's intensifying competitive pressure. Established players like Booz Allen Hamilton, SAIC, and Palantir compete for identical Defense Department analytics contracts. Customer concentration risk remains material with 85% revenue still from federal sources, and BBAI stock remains volatile. Daily price swings exceeding 8% to 12% are common, so here's the proper analytical framework. This is a high-conviction, moderate to high-risk position. Either Ask Sage integration succeeds and federal funding materializes, or execution stumbles and valuation compresses back toward $2 to $3 range. From a thematic portfolio allocation perspective, BigBear.ai connects to multiple powerful secular trends. AI-driven national security modernization, supply chain resilience platforms, cybersecurity threat intelligence automation, government digital transformation, and biometric identity verification at scale. If you already own traditional defense prime contractors, like Lockheed Martin or Northrop Grumman, BigBear.ai represents the software-centric, AI-native complement, a tactical method to access next-generation decision intelligence. Before mainstream defense sector ETFs add meaningful BBAI allocations. So here's my direct question for you. Do you believe AI-powered decision intelligence becomes mandatory infrastructure across all federal agencies and Fortune 500 supply chains within the next 36 months? Share your investment perspective in the comments section below, and remember very clearly, this represents educational market analysis, not personalized financial advice or a recommendation to buy or sell securities. Before you close this video, here's what demands your undivided attention. BigBear.ai has active multi-year Defense Department contracts, real federal backlog of $376 million. Real FedRAMP high security clearances, real recurring revenue from 100,000 plus government users, and a legitimate strategic pathway to solving a $45 billion problem in defense analytics, supply chain intelligence, and secure generative AI deployment. The market is valuing it as a transitioning government contractor today at 14 times sales. But if Ask Sage integration accelerates, commercial revenues scale beyond 40% of mix, and federal appropriations flow, this could experience fundamental re-rating toward 18 times to 25 times revenue multiples that high-growth government SaaS platforms command. If you want more institutional-grade stock breakdowns exactly like this rigorous analysis, hit that like button right now. Subscribe to this channel and activate your notifications. Stay methodical in your research. Stay informed on macro catalysts, and remember this principle clearly. The most successful long-term investors don't chase price momentum after stocks double. They identify strategic acquisition catalysts and government funding inflection points, while valuations remain compressed and institutional ownership is still building positions.